Naira falls to 800 naira per dollar. That's the lowest rate in 9 months, as 28 states failed to attract foreign direct investments into their state due to probably the 6.78% capital importation in Nigeria. That's according to NBS report. Welcome to Business Daily. I am Yusuf Akogu. Let's take our business top stories. Glad to have you back. Now we look at the commodity prices in Nigeria. Of course, for the month of July, you look at the prices of groundnut there. About 100 kg at Bodija Market. Bodija Market is in Oyo State, 32,000 naira there. Why groundnut? One Congo, that is a one mudu, as people call it, in same Bodija Market is around 400 naira. Of course, you go to Dawanu Market down in Kano, a bag there, 100 kg is 20,500 naira. Same in Dawanu Market, one tier is going for 520 naira. In Gboko Market down in Benue State, a 100 kg bag is about 27,000 naira. Why one model, same at Gboko main market there in Benue State, is being sold for 200 naira. If you go down to Lagos Market, the 100 kg bag, 32,000 naira. Of course, one paint bucket, 1,050 naira. Igbudu Market is in Delta State, South Nigeria, 34,000 naira for 100 kg bag. Of course, in Umuahia Market is going for 27,000 naira. If you go to Ukwo Market, it's in Enugu State. A bag 100 kg is 23,000 naira. Of course, one paint bucket there, same at Ukwo Newi Market in Enugu State, is around 950 naira. Of course, prices of sorghum in Nigeria for the month of July, 100 kg at Maitagari Market in Jigawa State, that is northwest Nigeria, is about 30,000 naira. Of course, if you go to Gboko in Benue State, it's 32,000 naira. If you go to Ashao Market in Kaduna, 32,000 naira as well. Of course, Night Mile Market in Enugu State is 24,000 naira. While Inugeli main market in Delta State is going for 35,000 naira. If you go down to Umuahia main market in Abia State, it's actually going for 36,000 naira. Of course, the prices of cassava as well are also on the high side. Ungrinded one, that is a bag of yam flour. Ungrinded one is 75,000. Between 75,000 and 160,000 naira. Why a bucket of gari is between 500 and 900 naira. A bag of Ijebu gari, that is a 100 kg in Edo State is about 35,000, between 35,000 and 40,000 naira. Of course, if we go down to here in Abuja, it's around 16,500 or to 20,000 naira. Of course, it's same in Benue. If you go to Benue as well, it's around 13,000, between 30,000 and 18,000 naira. Of course, white gari down there in Port Harcourt, that is 50 kg, is about between 15,000 and of course 20,000 naira. Let's look at the price of yam flour in Nigeria market as well. Of course, down here in Abuja, the large one maybe, it depends on the sizes, is between 1,700 and 3,000 1,000 naira. Why the medium size 1,100 and 2,000 naira. Of course, the large one, the large regular yam, the large one is about 182 2,500. Why the medium size is about 1,000 and 1,700 naira. So interesting prices there for you to make your choice. Of course, depends on your wages and indeed your salary. You make your choice regarding to this. So we'll quickly look at the Nigerian market. Of course, the market closed positive with the index at all-time high of over 65,000 basis point there. 1.685% it gained on the day. Of course, the market cap also gaining so much as well. The volume of trade, 884.715 million. Of course, in terms of value, 9.412 billion naira. And of course, the deals, 8,922 deals. The 922,000 deals on the day. Of course, the gainers for the day, well, we have the likes of Transcohort there gaining 10% to close at 39 naira 50 kobo per share. Of course, FTN Cocoa as well gaining 10% to close at 3 naira 85 kobo, and of course Shelaram also gaining 10% same to close at 1 naira 76 kobo. On the losing side, we have some other stocks that are also Cheap PLC, of course losing 10% to close downward at 1 naira 17 kobo there. Champion Breweries also closing negative there, 9.89%, and of course Magni Coals in the industrial sector also losing 9.33% to close at 68 kobo per share on the day. The top traded equities, most of them from the banking sector usually, but again there's a change today. We have Champs today doing 91.7 million shares. FCMB Group also 78.7 million shares, and of course Universal Insurance Company 75 million volume of shares on the day. Of course, the sectoral performance is also reflected based on the activities from the top traded sectors. According to the performance on the day, we have the banking sector not really so doing well. The banking sector not doing so well in terms of performance today. Negative, it closed 3.10%. NGS industrial sector recorded the highest gain for the day, 7.48%. And of course, consumer good down 0.43%. And of course, the Nigerian oil and gas 0.73%. And of course, the insurance sector also down 2.41%. Let's look at the rest of the continent. How are the market across the continent faring today? GSE in Johannesburg closed positive yesterday, 0.2%. And of course, NSE in Nairobi, Kenya also closing positive, 0.42%. GSE down here in Ghana, that is West Africa, next door neighbor, 0.15%. Interesting performance from African stock market on the day. We'll get an update from my guest who is joining me via Zoom from Johannesburg in South Africa. Petri Redilinga is an investment trader and of course a founder, Herea Capital Advisors. Good morning, Petri. It's morning down here in Lagos, Nigeria.
Good morning. Good morning. It's just turned afternoon here in Johannesburg, so
absolutely.
We'll get used to the time zone, I guess.
Yeah. Good to see you again. Tell us what's happening to JSE. It's not really been doing well lately.
Yeah, it's been a bit tough, I think, for our market locally. I think we're really sort of dealing with an international shift in sentiment. We can see particularly in the US as well. That markets are starting to become a little bit anxious, I think. I think that what we're starting to see is a bit of a shift of economic importance, if you will, from the west to the east, right? So we've had really strong markets in the US, primarily on the back of, big tech, while their economy is essentially starting to overheat. And we've seen that disconnect coming in over the last sort of 6 months to 12 months, where the US is forced, and other Western and first world economies like Europe and so on, are forced to continuously increase interest rates in order to slow their economy down and to battle inflation. While if you look to the east, where economies like the Chinese or China for example, are in a situation where they're trying to stimulate their economy, and they're taking measures to lower interest rates and to increase lending so that they can sort of spur economic activity. And us, of course, being more commodities and resource heavy exporters, Nigeria, a lot of oil, obviously, we stand to benefit from a growing Chinese economy more than we do from a growing US economy, right? So I think that we are uniquely positioned as countries in Africa to essentially really sort of play the best of both here as the Chinese economy continues to expand. And if they, do some stimulatory measures and get the Chinese economy going, we're really going to be big beneficiaries of that, at least from an export perspective, right? So it's been a bit, although, we have had some challenges locally through the JSE. The trading volumes have been really, really low over the last couple of months, really most of the year so far. And if you look at what July has been, so far, we're sort of running around 2/3 to, I want to say, almost 60% of all the volume that we would normally be doing. So it's been a very quiet time. And I think that's reflective of just this global sentiment of a little bit of uncertainty around, do we see a sort of westernized or Western first world global recession in the second half of the year? That is increasingly looking like it'll be the case. Or do we see, essentially a China-led economic sort of commodities boom in the second half of the year? So I don't know. We'll have to wait and see. There's a lot of interesting challenges, I think, on the cards at the moment.
Oh, well, interesting there. To what extent you made so much reference to China? Towards how will whatever happen in China affect Johannesburg Stock Exchange? We understand that the inflation numbers were actually released yesterday.
Yeah, so essentially, the more China manages to stimulate their economy and get growing, right? I mean, we know that China is the manufacturing hub of the world, if you will. So the vast majority of the commodities that we produce in South Africa, as well as the rest of Africa, are exported to China, right? So all the iron ore, not all the iron ore, but the majority of the iron ore, a lot of the coal, a lot of the sort of cobalt, the raw minerals that we need to manufacture the goods that we use every day, motor vehicles, cell phones, that type of stuff. All of that is being shipped essentially to China. So the more productive they are, the more the demand, or the more demand there is for the commodities and the resources that we produce in Africa, right? So the better the Chinese economy is doing, the better our mines will perform. If you put this in the Nigerian context, for example, China is an enormous consumer of energy, right? And your sort of primary export is oil. So if their economy really gets going again, they're going to need an enormous amount of oil. And we've seen oil prices somewhat depressed recently for what I think are a myriad of artificial reasons. But essentially, if the Chinese economy really gets going again and we start seeing, 7% economic growth per annum or more in China once more, that's going to be great for economies such as ours, where we are more geared towards exporting minerals and energy.
Petri, over the last 7 days, we've seen a drop in JSE market to about 2.3%, driven primarily by a decline of 4.3% in materials sector. Talk to us. Why is there? It seems like there's no interest in investment in that sector of the market.
Well, so we're playing this balancing act at the moment where on the one side, I've just sort of spoken a lot about the potential impact that the Chinese economic recovery could have on our market and our excuse me for a second, on our market and on our commodity sector. However, that hasn't yet been the reality, right? At the moment, our market is still very closely tied to the US, if you will. And the US market is starting to look like it's a bit overcooked, right? A lot of the participants in our market, if I can put it that way, are generally international investors, right? And a lot of the money comes from Europe or from the US, who are investing their funds and their pensions and whatever in stocks in South Africa or in South African companies. one of the challenges that we're having at the moment is that we have the situation where in the US, if you look at all the economic indicators on that side, their inflation is a significant problem, which keeps putting up interest rates. I think the interest rates have gone up faster in the US in this last period than it has almost ever in history, right? And we've seen that when interest rates go up that quickly in the US, it generally leads to a recession, right? We also have consumer spending and consumer confidence in the US essentially completely collapsing, right? So their economy is in real trouble. And that, as we know, America is still an enormous influence on global financial markets. So as they sort of grind to a halt and enter into this recessionary phase, that is having a negative impact on just markets across the world, really. So I think that's part of the reason our market has performed so poorly, and also part of the reason why volumes traded through the JSE is 60% of what it should be or what it used to be, right? Is because that lack of confidence on a global scale to make investments and risky investments, particularly emerging market investments in Africa, are considered risky to the first world or the developed world, if you will. So I think that's a large part of the reason and why we're kind of looking to China to say, well, look, guys, let's get less dependent on the West and start doing a bit more business with the East.
Okay, Petri, let's look at the larger economy. Power cut has been a major issue in South Africa for a couple of months now. There have people been saying that the economy has been slowed down due to power cut in the economy. How do you think this crisis has affected the performance of the general economy indeed?
Oh, absolutely, massively. I can't overstate the importance of that. I mean, if you look at some of the richest countries in the world, right, and you look at the amount of power that they consume, the amount of electricity or energy that they consume, it's really high. And if you look at some of the poorest countries in the world, the amount of energy that they consume is really low. So it's undeniable that the more energy is available in an economy, the better the economy fares. We've been grappling with load shedding now, or let's call it what it is, rolling blackouts for, I don't know, 15 more years, a long time, almost 2 decades now. This year, I think we have had a total of 7 or 8 days for the entire year that we had electricity for 24 hours. I mean, it is enormously challenging for any manufacturing business to operate in these conditions, right? So absolutely, it has had an enormous impact on employment, on economic production. It really is a crisis that we have to deal with very, very quickly, right? And these are additional factors that weigh on whether or not people have confidence in investing in South Africa.
But despite all of this, we're also seeing some respite there for the rand. Is in a way appreciating against the US dollar. But let's look at the manufacturing sector. What has been the impact of this power cut? When we look at the figures that was released yesterday, the manufacturing sector output is up here by 2.5% year on year in the month of May. So talk to us about the impact of this growth will have on the economy.
So, I mean, it's interesting to see the month-on-month number, I think, was down by 3.5%. As we went through a phase, earlier this year where load shedding had eased off a little bit, so manufacturing production was able to recover. And then it's intensified again now. Quite recently, load shedding intensified once more, so you can see that month-on-month number coming down something like 3.5%. On the year-on-year number, so comparing this period to the same period last year, as you mentioned, it's up 2.2%. So it's quite interesting to see that. Well, it's a couple of things. One, the companies are adjusting and adapting and becoming energy independent, if you will. We're spending an enormous amount. The fastest growing industry in South Africa at the moment is importing solar panels. I mean, who would have guessed, right? So solar panels and off-grid solutions are really where you want to be focusing, at least if you're an entrepreneur at this stage. So I think that companies are becoming more energy independent, but also, we are still recovering, I guess, from the massive impact that COVID had on our economy. I mean, if you recall, we basically shut down the entire economy for a long period of time, and that takes a very long time to recover from, right? A lot of companies closed. So I think that what we're seeing on the year-on-year, where there's a slight uptick in manufacturing production, isn't necessarily reflective of our electricity situation as much as it is just a normalization of production activities post-COVID, if you will.
Petri, inflation numbers too are not looking good, as well as MPR numbers. What is the Reserve Bank doing about it to, in a way, attract more investment into the economy?
Look, I mean, the only thing we really can do is keep pace with interest rates with the US. The challenge that we have is if we don't put interest rates up as quickly and as much as what the US does, that our economy becomes a little less attractive. So if you could borrow money in one economy and invest it in another economy, you'd want to borrow from the low cost, from the low interest rate economy and invest in the high interest rate economy, right? If I can borrow for 1% and invest for, yield 7%, I make 6% for free. And that has been a large portion, or a very attractive thing for international investors to do in South Africa. So as interest rates in the US go up, we have to keep pace with them in order to keep that margin in place, in order for them to continue to be attracted to our to come and invest here, essentially. So basically, the only tool we really have from a central banking perspective, I would imagine, is to continue to raise interest rates, which is, of course, going to continue to slow down the economy and continue to make life a bit more challenging for the average South African.
Okay, Petri, let me get your views now on some of the reforms that the government of Nigeria has carried out in the last couple of weeks. Quite a few of them, the exchange rate unification, subsidy removal, and of course, tax reforms are actually ongoing here in Nigeria. What is your view as a potential foreign investors? What do you think this means for you?
Look, I think I know that it's a hard pill to swallow, for the average Nigerian, right? Petrol price has gone up a lot. The Naira has weakened a lot. But I think that these things are relatively important to do, right? They're like pulling off the Band-Aid, and it hurts in the beginning, but I think over time you'll start to see the benefit from it. So essentially, to keep the Naira pegged, I guess, is enormously expensive because the government has to continue to buy dollars in order to stabilize the currency. If they don't have to do that, they could spend the money on things that are, more important. I think that social sort of support to lower income households is very important. With some, and it frees up some cash for that. A large part of the fuel levies as well. I mean, I know that was great to have very low fuel prices, but removing those constraints really kind of frees up budget for the government to do things that are important. For example, one of the things I think that has happened as well is that there's really a focus and a crackdown on getting rid of some of the jihadist contingent that is plaguing parts of the country and, stealing a lot of the oil, right? So I think that even though in the short term, these are very painful reforms to make, it does show that the government is starting to focus on the things that are really going to move the needle to start improving things going forward. And often, we have to walk through the darkest times first before the sun starts to rise, right? And I think that we're seeing at least a government that is committed to doing that. So I think in the long term, it's going to be, or even in the medium term, it's going to start paying off. I think that it will start to attract foreign investment because, there's a number of problems with Nigeria, and security is probably the primary one, right? If we can see that starting to be dealt with, and we need to you guys need to free up budget to be able to do that. I think that we have a situation where Nigeria sort of starts to take the lead from an economic perspective in Africa again.
Petri, before I let you go, how would these reforms indeed strengthen Nigeria-South Africa relationship?
Look, I can't really comment too much there. I'm not a big fan of our own government here in South Africa, I'll be honest with you, simply because I think that the level of corruption is enormous, right? I hope that our government can learn from yours in how to prioritize the people rather than prioritize the pocketbook of the leaders.
Petri Redilingas, investment trader, and of course, founder, Herea Capital Advisors. I must thank you for your time on Business Daily today.
It's a pleasure. Thank you for having me.
Thank you. With that is a wrap on Business Daily. Join us tomorrow for more. I am Yusuf Akogu.